President Trump has made his pick for the next chairman of the Federal Reserve. On Friday, he tapped former Fed Governor Kevin Warsh to replace Jerome Powell when his term ends this spring. Currently, he is a fellow at the public policy think tank Stanford's Hoover Institution. So let's bring in Sarah Foster, economic analyst at Bankrate, to break down what this really means for your money. Thanks for joining us.
Thanks for having me this morning, Rachel.
So let's start here, Sarah. For people at home, what's the simplest way to explain why a new Fed chair matters to them?
I like to think about the Fed chair as a front man in a band. So like a Mick Jagger, Rolling Stones type of Kurt Cobain, Nirvana, if maybe you're more into 90s grunge. It's not necessarily that this is a person who's more important than everybody else, but he is kind of the face of the Fed. He's kind of the communicator in chief, as I'd put it. A lot of the attention is on him. He's the one who's responsible for communicating for the rest of the committee. And inside the boardroom where interest rate decisions are made, he's really the one who's supposed to be kind of steering the committee to a consensus. And that might be pretty difficult this time, as we know that a lot of officials are kind of disagreeing about what their next steps are.
So, Sarah, break down Warsh's philosophy and how it'll impact the Fed moving forward.
Kevin Warsh, 20 years ago, when he was previously on the Fed, was someone who was very inflation-minded. He actually, in transcripts, is seen kind of going head-to-head with many officials, arguing that they shouldn't be keeping interest rates too low for too long because it could lead to higher prices. He's also someone that's a little bit more wonky, but he's someone who is really mindful about quantitative easing and some of these unconventional policies that the Fed took during the Great Recession and then the coronavirus pandemic to expand the money supply. He argues that that kind of overstepped its reach and maybe resulted in some of these inflation challenges and affordability problems that many households are facing. But it's a little bit different than kind of what he's arguing this time. He, as President Trump has been very vocal about, he's someone who wants to lower interest rates. That, of course, was President Trump's #1 quality and his pick for the next Fed chair. So how he'll reconcile those policy differences from 20 years ago with how he feels about things today to prove that he will be independent from the White House is likely going to be the most important question that he'll answer when he is up for Senate confirmation.
Yeah, interesting to see what he'll end up doing there. If he does get the job, of course, we don't know exactly what he will do, but what do you think this could potentially mean for folks' mortgage rates, car loans, and credit cards?
Absolutely. You know, a lot of Americans might not go about their day thinking about the Fed, but every decision that the Fed makes comes back to how much they can afford the items they both want and need, how they can borrow, you know, how much it costs to borrow money. Kevin Warsh is probably going to have his work cut out for him. He's going to have to bring very concrete economic evidence to sway the committee off the sidelines. You know, right now, our forecasts are suggesting that we'll see 3 rate cuts this year. Markets are expecting 2, and Fed officials are expecting just 1. So when it comes to how much it costs to borrow money, Kevin Warsh wants it to be a little bit cheaper this year, and he thinks that, you know, booming growth might actually just be a productivity boom that helps inflation maybe not increase as we see booming growth. But as we talk to many Americans out there who are continuing to worry about the job market, who are continuing to worry about affordability problems, it's kind of one of those instances where the economy may be booming, but a lot of Americans' finances are not.
All right, Sarah, thank you so much. I particularly liked your analogy with rock stars, really helping us non-economy folks really understand the weeds of all this stuff. So I appreciate you so much being with us.
Thanks for having me.